Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Independence Day and not a lot of fireworks for us to talk about this week. We're going to talk hogs and pigs. We'll talk some acreage numbers, which I guess is probably the biggest surprise of the week. And we'll take a look at restaurant performance index. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, we saw cash cattle prices higher. They were up $1.60. Those feeder cattle auctions were mostly steady this week. On the futures side, the August live cattle futures contract closed up a little more than $1.25, and the August feeder cattle contract was up $1.60. We lost 40 cents on the choice box beef price. That actually now puts it $25 below a year ago levels. That weakness came by and large in what was a weaker week for the rib portion of that component this week. On the hog side, cash barrels and gilts were 80 cents higher this week. The August lean hog futures contract was down nearly $4 this week. We did lose $3.50 this week on the pork cutout value, as bellies were off pretty hard this week.
Maybe there's cheaper bacon in all of our future.
We might be able to get you some cheaper bacon one of these days.
That's gonna be probably my plight until the day that dies, that my bacon's never cheap enough. All right, let's talk slaughter numbers as we take a look at this week. I'm assuming a little bit of a slowdown to give folks some time to rest and recuperate with the long holiday weekend.
Yeah, that's right. If you look at what USDA is telling us for the week ending July 2nd, a run of 636,000 head of cattle slaughter this week. That is down 30,000 from where we were a week ago, but up 8,000 relative to a year ago. Light run on hogs as well, a run of 2.286 million head according to USDA. That's down 18,000 head relative to a week ago, but up 14,000 head from a year ago.
How are we looking as we compare your year over year on both beef or cattle and hog slaughter?
Yeah, on cattle slaughter year to date, we're up 1%, while on the hog side of the equation, we're down 4.2%. As you and I have been talking those numbers for a number of weeks now, I would say, we're continuing to see larger runs of hogs that have kind of tightened up what was a much larger decrease given how we started 2022. So a little larger runs than where we started the year.
The big one for us this week, Hogs and Pigs report, and really not too many surprises as we take a look at those numbers.
Yeah, that's right. Well, when it's all said and done, it's nice to actually get a report where there isn't big surprises for a change, I will say. And I think we got that out of Hogs and Pigs. When you look at the overall breeding inventory as of June 1st, it came in at 99.2% of a year ago. That was pretty much in line with pre-report estimates, as overall Hogs and Pigs as of June 1 came in at 99.1. That was very near pre-report estimate, midpoint estimate as well. So not a lot of what I'll say in any really big surprises out of that Hogs and Pigs report. It tends to tell me that we've got a lot of folks still just going sideways in terms of not expanding, not contracting, waiting on feed cost, waiting on what's processing capacity look like, waiting on general economy. What happens to pork demand as we continue here in 2022.
How much does an issue like Prop 12 in California also maybe come into play, knowing that there may be some regulatory hurdles that need to be cleared or rectified before it could potentially impact demand, especially for a state that takes so much pork?
Yeah, so you're right to remind us. I think the simple answer here is we know the direction of the effects of Prop 12, and that's less hogs, all else equal. Trying to figure out the exact impact of that, I think, still remains difficult. But when you have some large companies shuttering processing, and it reminds me that we may see less of that. And you go on top of that, and just getting feed to the West Coast right now seems to be a pretty difficult issue as well. So I think it's making a lot of folks wonder about expanding or maintaining, even for that matter, in some of those Western states on the production side.
Do we also tend to at least watch or watch at least a little bit what's going on with China as they make an attempt to rebuild or expand their hog production in their country?
Yes, and I think there's a little bit of positive news there as we kind of look at what's happening of late. For me, it's again, I'll say I don't believe we're going to go back to the glory days of a couple of years ago when the Chinese were taking a lot of pork from us in the worst of their outbreak of ASF. But for me, it's as their economy's reopening, they've kept it shuttered pretty hard as a result of COVID-19 issues there. As they become a little more flexible, I'm curious what happens to pork demand there, and then what that means for U.S. trade into China.
All right, let's talk acreage numbers. June acreage report came out this week from the USDA, and probably one of the biggest surprises, I think, of the week in that report.
Yeah, so when you look at the soybean side here, we got 88.3 million acres of soybeans planted according to the June acreage report. That's although up 1% from a year ago, relative to what we said back in the March intentions report, down about 2.6 million acres. It was interesting that soybean futures were off the day we had that report. So it's a lot of interesting changes this week. When you see corn plantings, it came in at 89.9. That was an increase of about 400,000, a little more than 400,000 acres from planting intentions. And on the corn side, we talked about September corn futures down more than 60 cents on the week. I guess from a livestock production standpoint, lower prices are good in terms of getting those feed costs lower. So we'll see what happens as we continue to watch weather, I think, going forward now.
We are still a long way from this bin being in the crop. And I know you've been in some pretty warm temperatures. This part of the country has been hot and dry, and we're starting to see some drought develop in some key corn and soybean producing parts of the country and intensify in other parts of the country. If I'm a livestock producer and I see this report this week and I know what's going on in the weather, what am I doing to protect some margins and some profitability, hopefully, as we move down into the rest of the year? Yeah,
so I guess my news here is, most importantly, and you're correct, we're a long ways from a crop in the bin. And yes, it looks like the western parts of corn and soybean growing areas have been pretty tough of late. Looks like we could move through at least the I states and see pretty good estimates right now of what the crops look like. And then they get dry again as I think you get further east as well. So it's a little early. I guess I just caution that don't think we're over high prices on the feed cost side. And, if you can't stand that risk of it becoming abnormally dry and we really cut yields, you should think about how can I lock in some more reasonable prices as we've seen them this week, at least.
Restaurant Performance Index, last report for us this week as we take a look at that. Some good news to end. I'm going to take the positive out of this report. So I'm going to say we're going to end on a positive note this week.
Yeah, for sure. So the overall index was up 0.5% for May of this year, which is the first time since February that we've seen an increase in the overall restaurant performance index. For me, the probably best news out of that was looking at the current situation portion of that index. It was actually up a little more than 1%, and that was on what was strong same-store sales. So although we've been worried about economic slowdown, this data to me suggests Sales out of restaurants have been was fairly strong in May. The drag here was a little bit of lower expectations, and I think that has more to do with higher interest rates and just overall economic concerns going forward. But it's nice to see that current situation index posting such a strong positive here in May.
Which I would assume is good news on just the consumer demand front and feeling. Everything's about feelings right now.
Yeah, for sure. And you know, we all are concerned about where general economic activity moves going forward. But thus far, I think, you know, the answer here is that consumers continue to spend money. So it has been good from a demand standpoint for us in the livestock industry.
Scott, always good to see you. As we look ahead to next week, kind of a slower week for us, and we're going to dig into, we had a viewer question submitted. Just to let you know, we did not forget about it. We just thought we would give it some more time to talk, and we're going to address that next week. And then also we're going to talk trade and what else?
We finished the week with a jobs report.
Sounds great to me. Scott, great to see you. Have a happy Independence Day. Safely operate your fireworks.
You do the same, Megan.
We're only a sparkler house.
Okay, all right.
All right. So every weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And if you'd like to check out our counterparts on the grain side of things, check out the weekly commodity market update on Tuesday afternoons with Ben Brown and Brownfield's Will Robinson. Have a great weekend. I'm Megan Grebner for Brownfield.